Welcome, everyone. My guest today is Managing Editor James Kleimann to talk about how lenders are adapting to this market and the potential for AI to disrupt everything in housing. James, welcome to the podcast. I think one of the first things I'd like to, if I was going to say an overarching theme of what I'd like to talk to you about is kind of like how are lenders really adapting to a different market? And of course, everything could change next week, at least a little bit. If we see rates go down, if we see a rate cut by the Fed. But even so, right now, what do you see lenders doing to adapt?
So yeah, it's a great question, Sarah. I think it's going to depend on the kind of lender that you are and the sort of strategy that you want to take. And so if you're a distributed retail lender, you can't approach the market like a Mr. Cooper, right? And so it's also important to note that if you're a wholesaler, you're going to use a different strategy as well. And so UWM recently came out with a new product, and it's called Refi 75. It is essentially a replacement and expansion on the similarly named Govy 125. And it's a little bit more encompassing in that you can do conventional conforming. So it's not just the Govy loans. And they want to do this ahead of the Fed making their rate cuts. And we know they're going to cut the rates. We don't know if it's going to be 25 basis points. We don't know if it's going to be 50 basis points. And that is going to change the spreads. That is going to change some of the dynamics on the secondary market. And we know that rates have moved lower, but the premiums are still compressed. So it does make sense to keep it at a lower coupon. And so there's less future refi risk. And I think the MSR values are going to be a little bit closer to the par rate. So it's a pretty good strategy. And I think UWM is pretty well known in the industry for trying to get ahead of things and making sure their brokers have products they can use before that market fully turns. So they're not behind, by a week, 2 weeks, whatever. And this is just yet another example of that. There are some criticisms, maybe criticism is a strong word here, but that the way UWM is rolling out this program is that it is effectively just like retail, that they're not really any different from any distributed retail lender in that if you read the fine print, they do have some requirements. And so one is that the lender paid comp must be at or below 150 basis points. And that loans that are not currently serviced by UWM basically have no restrictions on the note date. Although the FHA streamlines and the VA IRRLs, they do need to meet the seasoning requirements. But if you look at the conventional conforming loans currently serviced by UWM, they need to be a full year from the previous note date. And then the Govy loans need to be 210 days or more from the previous note. And you can't combine the 75 basis point incentive with the control your own price, which is kind of UWM's biggest, maybe best known incentive gambit. So yeah, they want to get out in front, but they're doing it in a way in which you kind of have to be a part of the UWM ecosystem to participate. And certainly there's been criticism for a couple of years in how they've restricted some of the choices that brokers can make.
One of the other things that I see lenders doing as far as opportunity getting ready for is, of course, home equity. So I'm at the IMN Home Equity Conference. I believe it's the first one they've ever had on this topic. It's pretty full. I just got done moderating a panel with some really smart people who, were talking about the opportunity there. And, we know that homeowners are in a good spot, especially if they, refied and, prices have gone up. So we've got tons of tappable equity. And one of the questions was like, okay, there's all this equity, but how much could homeowners reasonably tap that, they could actually get a loan for, and that investors would buy it and all that stuff. And it's about $18 trillion. It's a lot of money. So what we're seeing, though, is that there are lenders who are used to doing this in the past who, are kind of clicking back into it. There are people who have not done this home equity in a long time, and things have changed, right? Different products, different investors in some ways. And so I think it's a really interesting to see who's gearing up for what.
Yeah, I think that's a great point, Sarah. And when you look at the lenders out there, a lot of them have made no bones about wanting to get into that home equity opportunity, because when you look at the origination market, we're optimistically hoping for $1 trillion, maybe 1.5, maybe 2 if things really break right in a couple of years, right? And refis are going to be, even if they do get better in 2025 and 2026, no one's going to be looking at a 2021 size opportunity in a very long time, right? Maybe ever, right? That could have been a once in a lifetime sort of event. And so, where is the money? The money is already in the existing houses, and it's not like we're building a ton of them now. And so, if you're looking at 18 trillion, 19 trillion, whatever it is, in tappable home equity, you have to look at the other factors, right? So if someone has a note at like 2.5%, they're not going to get rid of that house
Right.
and that mortgage unless there's a huge life event or crazy circumstances. And even then, a lot of them are probably going to opt to be landlords in that circumstance. But we just saw a report that came out that showed Americans have the highest level of credit card debt in history. Now, the CFPB is also working on trying to prevent medical debt from reaching creditors, and that's a whole other kettle of fish that we've been over and we'll probably go over again. But the debt levels in America are high. It is part of the American economy is consumer credit debt, right? And so if you want to expand your house because you have a new baby, or you know maybe you need to retrofit it so that your bedroom is downstairs and you have to change, right? Like there are so many different configurations, so many different reasons someone might need to tap their equity. Hey, what's the price of college these days, Sarah? Right? It's like sixty
It's high.
thousand dollars a year, right? It's
Right.
crazy. It is bananas, absolutely bananas. So my kids are just going to go to trade school, like whatever. Yeah, they'll be electricians or something. Anyway, the point being, life in America is very expensive. And when you look at the net wealth of the average person, it is almost entirely tied up in their house,
Yep.
right? And so, can a lender reliably get to that equity and give, a new opportunity for an existing homeowner through a HELOC or through a HELoan, or Rocket has some pretty innovative programs that they've been launching in terms of credit cards for homeowners, right? And they want to have that as part of the flywheel. And a lot of lenders, I want to say guaranteed, sorry, rate.com rate has been there, UWM has been there, Rocket has been there. A lot of the everyday big IMBs are trying to break into that market, but it remains something you think about when you're banking with Chase or your local credit union. And so it's been really hard to break in there. We also know that there are a lot of big, HELOC and HELoan aggregators, for lack of a better term,
Yeah.
who are securitizing these mortgages, or second liens, I should say, and trying to figure out a way to monetize that. It's still in the nascent stages. But yeah, I mean, like as an opportunity goes, it's a big one. But you still need to figure out, how do you compensate your sales staff, right? Because a lot of them are not going to be doing it for like $800, right? Like
Right.
it's hard to do, you know, to convince someone to step over dollars to pick up pennies compared to mortgage origination. So yeah, there's a lot still to be figured out there, but I mean that's kind of the next great adventure in mortgage, right?
I think it's also just like with any sort of product that you want to reach consumers with, you're competing with a lot of other people who have already identified how much that person might have in home equity, might have already reached out to them, keeping them warm. I think this goes back to like if you're a loan originator in this market, or any market, but you need to really be thinking about your relationships. I was at a event, the NAMBA event, a couple weeks ago, and they had an originator up there who had done an incredible amount of business and only had 85 people in their database, because those 85 people get treated like royalty, right? They pay so much attention to them, and through that, they've really grown their business because they. To me, it's more like a realtor. They stay in constant touch with those people, and you think, oh well, I mean, how many mortgages is somebody going to buy in their life to stay in touch? But the referrals, and they feel like this person is really there's really a relationship there. And so of course they're going to go to them. And even if someone reaches them first, they're going to be like, that just prompts them to call their, who they think of as, this is my lender, right?
Yeah, it does get confusing for some borrowers when the servicer is different, right? If the servicing is sold to, just as an example, a Mr. Cooper or another,
Right.
large servicer whose kind of primary goal is to service the mortgage, get the liquidity, and then maybe they can get you on the refi if you're in line, right? And we know that they're buying kind of mortgages that have higher coupons that they expect have a better chance than someone who has like a 2.5% mortgage of spinning out into refi, right? And so, you're probably not going to get a lot of business from people who have 2.5, 3% mortgages, but surely they have friends, they have family, they have
Right.
people in their network, right? And I think there are a couple different approaches, right? And it's true in almost every job that relies heavily on communicating and convincing people that you have something that you can help them with, right? And so that's true in journalism, that's true in all kinds of industries. And I would probably bank on somebody who has 85 people in their Rolodex or spreadsheet or whatever app they happen to use, who send them handwritten Christmas cards or holiday cards every year, who attend the same school or their children attend the same school as the people who are in that list of contacts, and who have kind of the personal touch. Let me give you an example. Actually, this is not mortgage, this is not real estate. We have renters insurance. My wife and I rent here in Brooklyn, and I don't think much about renters insurance. I don't think most people do, right?
Right.
And we have, I wonder if I can find it. I have this woman like Julie DeRossi, and she has been our agent through State Farm for like 7, 8 years or something. And I'll be honest, I don't even know what she charges. I don't know what the rates are, but she sends me handwritten Christmas cards, birthday cards, all kinds of stuff. Literally everything is handwritten. And maybe I'm just, old fashioned, but I'm not going to look for another person, even though I have never spoken to Julie. I think my wife has spoken to her once or twice. But when I see the cards, even though I mostly recoil when, like a car dealership wishes me a happy birthday, but that's different. Like that, I feel like someone really made the effort, and even just showing people that you care enough at least to spend the extra 5, 10 minutes doing it is significant. Not for everybody. Some people just say, oh, like renters insurance, like I'll just get whatever the cheapest rate is the next time I need to renew. But a lot of people won't. And so, there's one strategy, and the other is just, you blanket the landscape, right? You send out, there are still LOs out there I know who make 60 to 70 calls a day.
Wow.
And, sometimes they get leads from others, sometimes they're buying leads in bulk. And if they get one lock, that week, like that's pretty decent. If you're still closing 4 to 5 loans a month, right? Like we also see this in the real estate space, right? Like there are definitely agents out there who are buying, 500 leads a month by Zillow or OpCity or whatever, and they'll close 3 of them. And that's enough in some cases. So, there's no one size fits all approach, right? Sales is always going to be different. I personally gravitate more toward the person who has maybe fewer contacts but has stronger connections with them, because I just think that's a more sustainable business. You're not as reliant on another large company providing you the leads, providing you the opportunities that you act on. But everyone's different.
We see a lot of different people deploying different strategies to be successful. I want to switch a little bit. Let's talk about technology just for a little bit and Zillow. So you wrote a story yesterday about the ways that they're using technology to really personalize search. So I think that's really interesting.
I think it's interesting too, and I can't be the only one who's just absolutely sick of hearing AI, 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 and maybe I'm the only one who doesn't feel like it's affected his or her life all that much on a day-to-day basis and is maybe more scared of the potential than thrilled by it. But I can certainly admit that there are potentially cool applications, and we're finally starting to see some of it. Like, here's the example I gave last time. There's this AI generated image software called Midjourney, And so you put in a prompt, right? It'll say like, put Sarah Wheeler in a Porsche going 150 miles an hour in downtown Dallas, getting chased by the police. And they can do like a pretty decent job of a lot of that. But if you look down into the fine details, you'll see like Sarah's hands look like deformed, or, like there's just something obviously wrong and inauthentic. But it's getting better, and you can see that it's getting way better, by the month, right? So it is exciting in that respect. And I think similarly, like home search has been a pretty analog, pretty, I want to say like manual, like filtered process, right? So when I look for apartments, I use a Zillow based site called Street Easy, which is for New York City and the area. And if you want to find an apartment, like you have to put in all kinds of search parameters. You have to put in, okay, I want to find something between $2,000 and $3,000 or whatever it is, 2 bedroom, 2 bath, outdoor space, washer, dryer, dishwasher. You have to click like 150 different buttons, and then it'll come back and it'll say like you have 2 apartments, and then one of them will probably be a fake listing, right, put up by a scammer, and then so you're left with one, right? And so Zillow can't do a whole lot about that part of it. But what they can do is they can make the search a lot smarter and easier for you to look for. So they have this new adaptive natural language software that they've integrated into their home search function. And so you can put in, I want to buy a townhouse within 30 minutes of, I think it's called Deep Ellum in Dallas. And I want it to be a pink house, right? And so Zillow is going to take all of that through a pretty basic prompt, and they'll just filter all that right back to you instead of you clicking like 20 buttons. So I think it makes the search experience a little stickier. It makes it a little bit easier to go through. And I think maybe you can be a little more imaginative in terms of trying to get exactly what you want. And so you can combine things like, for example, I want to be within a 20-minute walk of my oldest son's school here in Brooklyn. So when I do eventually search for a new apartment, hopefully not for a while, but when I do, I'm going to put in, I either want to be on these 2 subway lines, or I want to be, within 10 blocks of this location. And it should be able to spit that out pretty quickly without me having to filter and filter and filter and then manually go through everything and make sure that, there weren't erroneously listed results. So it's pretty cool, and we're going to see a lot more of that coming. And that's really, it's one of the next big battles in sort of the real estate space, because everything is top of funnel, right? So
Yeah.
Zillow and Realtor and, Redfin and all of these big listing platforms, they're all trying to get the consumer to find a really easy, interesting experience that also leads to actual purchases or rents, right? Not just like somebody who's browsing casually and kind of,
Zillow gone
fantasy
wild, for
shopping,
instance.
Zillow gone wild, right? Yeah. Somebody who wants a waterfall in their kitchen, like probably not a serious buyer if they're looking at this listing. But that's really the next great battle in the real estate space, is the top of funnel. And so how do you reach them? And also, can Zillow or homes.com or Redfin or Realtor, how do they monetize it? And they're all kind of choosing a different tack. Maybe not all, but they all want to go about it through technology, because at the end of the day, you're going to, as a consumer, use something that you feel the most comfortable with.
Yeah.
And if you just want to say, hey, Zillow, like find me a 2 bedroom, 2 bath apartment with basement access within 20 minutes of this location, and they can spit it out without me having to spend 20 minutes on it, like more likely I'll be using that to get my next apartment, and they can monetize the landlord or me, maybe, right? Depending on how that works.
Okay, so in contrast to you, I cannot get enough of AI or AI news or what's going on. This is which is good, since I do a lot of tech interviews, and I, helped plan our AI conference. So probably good that it's not that I don't find it tiresome at this point. But I do think that cutting through the noise of AI is really important. I often think about what you just said, making it easy, and also the way that we're using Chat GPT and the other programs that basically are similar to that, like when you talked about making that image. And it's the query itself that really you have to know how to query in some ways. Like you're garbage in, garbage out in this way is like the better query you have, the more better result you're going to get. So how are real estate and mortgage companies going to design their AI so that they're taking advantage of that as consumers learn how to query better? Then I think that that's going to have a complete effect, a knock-on effect on everything else that they're doing.
Yeah,
Um,
and even in our own newsroom here, we had a couple people who tried to use the Zillow feature to look for what they wanted, and it turned zero results. And these weren't like wild, like I want to find a pool with a waterfall feature in the middle of Brooklyn, right? Like we're not talking any outlandish kind of fantasy ideas here, pretty basic stuff. And in some cases, it didn't turn out any results. So yeah, I mean, there should also be maybe a little bit better consumer training,
yep.
on the part of the portals if we have quasi professionals who can't get results in one of the most populous markets in the country, like it suggests to me that maybe there is some more work to be done.
I think one of the things that stood out to me, I went to the FHFA Tech Sprint, right?
Yeah.
And one of the things that they all said, they came up with some really interesting use cases for AI in mortgage finance and multifamily, all sorts of things, servicing. And it's not a set it and forget it thing. Like people, the companies that are implementing it, it's not like, oh, okay, we just adopted this LOS, we just adopted this CRM. It's not like that. It's like we adopted this. Okay, now what's the next? I mean, it's constant iteration because it's not a set it and forget it kind of thing. You have to, like, for instance, I'm sure the team at Zillow is working furiously to try to solve some of those issues because it's constantly learning. And so you've got to be constantly feeding it good stuff and also keeping up with what it's learning. So it's a really different thing than anything in the past.
Yeah, and I think that part is really exciting, and I am interested in seeing how it creates efficiencies in the marketplaces. But then again, like we've seen so much technology, especially in the mortgage space, come in the last probably what 5 6 years, I think, right? And it sort of became this sort of thing where there are a million different vendors and you need to have this little piece, this little piece, this little piece. This one has to
Yep.
talk to this one, and it all has to be integrated. And there are all kinds of other, and it just becomes sort of this like cottage industry of like, vendors that are doing a small component of what people need in the space. Um, but if everybody needs to do it, it doesn't really result in a tremendous amount of efficiency. And we've seen all this new technology that has come into the marketplace, especially in housing finance and mortgage, and the cost of the loan just keeps going up and up and up. So, technology is not going to be, what really creates the efficiency at the end of the day. But it is going to be a major tool. And we know that the companies that have the best technology, that have invested the most in technology, also are the most efficient, right?
Right.
I don't know if anybody can produce a loan for cheaper than UWM. Is that because they have better underwriters, better processors, better managers, better thinkers? Maybe, maybe not. Like, that they're probably very competent at a lot of these things, but they have fully in-house technology. They don't rely on any vendors. They build everything from scratch themselves, so they don't run into problems that maybe they couldn't foresee or communication issues that they got because they used, seven different vendors for seven different problems, but three of them didn't talk to one another, and so then they had to create a whole division of tech people in-house to liaise with a similar group of people at the various vendors, and then you have this like huge pyramid of different sort of like functionaries in the tech component of mortgage, and it just doesn't, that costs money, right? And like that
It
comes back to
does.
the consumer. And so we know that mortgage companies are generally not tech companies, and I'm not saying that they should be, but having a million different vendors that all create kind of these isolated specific products, I don't know that that has really improved the overall efficiency of the industry.
No, I think you're right, and I do think that we're going to see sort of a, come to Jesus moment of consolidation on when AI can do a lot of these different things. It's like, okay, what does that look like? And I would say this to you, James, too. One of the things that someone said to me, said on stage at the AI summit that I thought was so interesting. He has a baby under 1 year old, and he said, if you think about it, that child is going to be an AI first generation. That generation of
Yeah.
kids, your kids, they will never have existed before AI. And just like, we sort of measure generations like when did you get an iPhone and the
Right.
technology, it's like your kids are AI first generations. I don't know what we call that, but that's
I
pretty
think they're
crazy.
Gen Alpha, right? I think
Oh
that's
yeah,
what they're
yeah. I
called.
think they're Gen Alpha.
Or
Yeah.
maybe there's another, I don't even know. It's funny, I dropped my son off for his first day at school today, and it's 3K. So they're all 2 or 3 years old. It's basically daycare. It's a little more structured daycare. And I jokingly asked, is it okay if we bring their cell phones to school?
Mm,
And got a couple laughs, but it was definitely uncomfortable. Like that will actually probably be coming sooner than
yeah.
maybe one would expect or think. And it just goes to show that that the leaps in technology and you know how much time people spend just kind of within those worlds, these digital creations, is both like interesting, intriguing, potentially great for all kinds of businesses, but also maybe a little bit scary too. So, yeah, I mean, I think there are a lot of great potential AI use cases with mortgage because, I mean, think about the leap from having these massive computers, right, they're the size of a truck, and they were starting to digitize certain records for, mortgage companies, SNLs, like way back in kind of like late 70s, early 80s, and then all the way to today. And I remember when I started this job, Sarah, like a little over 4 years ago, I talked with a top executive at a big IMB, and he was joking, maybe not really joking, but he's like, I literally know of some very, very, very large banks that still do a lot of this stuff on paper, like pen and paper. And that blew me, like it completely, it was crazy because I'm paying my rent on Zelle, and everything is digitized, and it's to think that there are still people doing it in such an analog fashion is crazy. And for the kids today, they'll probably reflect back on the start of the AI as like, wow, I can't believe like Mid Journey they had these clumsy ass hands when we're like any 6-year-old can do like the Mona Lisa.
No, it's going to be so fascinating. I think the way you think about it is and feel about it is the way a lot of people do running businesses. Like they see the opportunity, they know they've got to jump in. They do have lots of questions. There are some, there's fear and uncertainty there, but there's no going back. You're not. I mean, we talk a lot, and your newsroom thinks a lot about who is succeeding in different markets and who's going to succeed and who's not going to make it. And to me, this is one of those things that if you don't get in early enough, you're going to be left behind so fast that you're not even going to see it coming. And I think that that's, what everyone's told me is that like, no, it's not going to be perfect and you don't have to do a lot of things, but you have to start somewhere.
Mhm.
Because it's gonna go fast. And if you haven't even started thinking about that and your competitors have, done one or two generations of it, it's tough. It's tough to catch up.
I also think that there was a panel. Maybe this is the one that you were on. There were a bunch of speakers who said AI is not going to be taking your job. It's going to be someone who knows how to use AI, and I think
Right.
that's true to an extent. But I also am maybe a little bit more cynical in that I don't think any business spends hundreds of millions of dollars or billions of dollars and looks at the honest economics of their business and says, "What are our biggest expenses? Oh, it's 75% personnel," without thinking that their investment in AI is going to squish that to like 35, 40%.
Right.
I just don't believe it. And so if people don't think that there is a possibility, a strong possibility that this does eliminate a huge number of jobs in processing, funding, underwriting, QC, I think they're being maybe a little bit naive. And even on the sales side, yeah, I don't think that they can do as good a job as someone who's handwriting cards and sending them to my address in Brooklyn. You'll never have that same degree of, I think, stickiness. But there are a ton of LOs who aren't very good and
Right.
who probably can't adapt or create as many efficiencies as the AI modeled technology that's coming out there. So yeah, I think there's going to be a big reckoning. Probably won't realize it for at least 5 years, but it's going to come, and it's going to come really furious.
Well, and I think that's something that we can say that companies can't say. We're never
Yeah.
going to interview someone who's going to be like, oh yeah, well, that's not true. I
Yeah,
did interview one
we're gonna
guy.
lay off 1,000
Yes.
people once we figure this thing out. Yeah,
Nobody's going to say that, but you and I can be honest about this and say, just from I mean, it's business, and they're in the business to make money, and if you can do this more efficiently, that's what they're going to do. So, well, James, thanks for being on. Love your coverage. Love all of the things that your newsroom is looking at. Just great content coming out of there, and I appreciate you being on.
thanks so much, Sarah. Really appreciate it.